But moving forward from here, right? How do you see the Fed responding? Because I kind of see these two different worlds, which is what we've been outlining on recent shows here, which is basically in one direction, they can say, hey, look, we've got inflation. It's an enormous problem. We're going to hike these interest rates up. We're going to, get unemployment back to something that's relatively within, we're going to sacrifice unemployment basically to crush demand and take inflation back down. And that's what we're going to do. Or there's kind of door number two, right? Which is to say, well, we're going to hike rates a little bit, but we're going to let inflation run above that. And actually, really, the inflation rate that we really want to see as a central bank is 2% was wrong for reasons X, Y, and Z. Instead, it's going to be 4 or 5% roundabout, and we'll keep yields slightly below there, and then just gradually inflate the debt away. If you had to kind of choose, do you see it as those kind of two options for the central bank? And if so, which one do you kind of more lean towards?
I see them wrestling with those two options. I think it's going to be neither one of those two options. I think this is the same thinking that got us to say, well, let's just cut Russia's oil exports by 20% and we'll cut his revenues by 20%. Like sounds really good in the theoretical ivory tower, and it's total bullshit. Because they're not dealing with the real world, right? In the same way that we cut Russian oil exports by 20%, the price impact more than makes him whole. The same problem here. If we cut jobs, we raise unemployment to a certain level to cut demand, like that's fine as long as we completely ignore the U.S. debt situation, which is we had a stock bubble, we had a housing bubble, we had all these bubbles, right? We had high inflation, and everyone says, oh, all these bubbles. Well, no one mentions we had a tax receipt bubble because of all that stuff. You had a rise in tax receipts that was absolutely unprecedented. I think it was up like 40% year over year at one point. And when it was up 40% year over year to all-time highs, it was barely above just the cash out of entitlements and treasury spending. It's incredible. It literally took this incredible tax receipt bubble driven by this incredible everything bubble to cover entitlements, which we're spending 2.9 trillion a year in entitlements right now. That's cash out every year, growing 6 just with enrollment. That does not include if we raise cost of living by 10%, which we'll talk about for next year. And then treasury spending, we're still running treasury spending in almost $1 trillion a year. So the whole will reduce demand. Yeah. Will it get inflation down? Yeah. There's no secondary thinking like the Russian oil situation to go, oh crap, GDP is now down, tax receipts are now down, and now our receipts are below our true interest expense, which are just our 2.9 trillion growing 6% a year entitlements, 2.8 trillion growing 6% a year entitlements, and maybe growing 10% or 16%, and our trillion a year treasury spending, which, oh, by the way, treasury spending is going up because we finance a third of our debt at under a year. So it's going to a third of a debt's going to reprice all much higher in a year. So, and what happens when our true interest expense is back above our receipts? Well, either we print the difference, money printer go burr, or we don't. And if we don't, then the bond market is going to be dictating to the United States government what rate it borrows at. Oh, by the way, the Defense Department wants $850 billion, or wait, no, it's $900 billion because we just sent another $50 billion to Ukraine. No, wait, it's $950 billion because we just sent another $50 billion to Ukraine. Oh, we're going to reshore everything. That's another $200 billion. So now the interest rate is going to go up, 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 and then the Treasury spending numbers going to go up, up, up because all that debt's going to reprice. You see, you get into this debt spiral. So yeah, on a surface level of first order thinking, yeah, great. Send unemployment up and reduce demand. Real world, it's bullshit. It's not going to work.